Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we look into the psychology of the moves today so that we can better understand tomorrow. And today we're going to be taking a look at the 30-year bonds on this day after the elections. Kind of, even though the elections kind of finished early in the morning. Either way, though, after the elections have come out, this is the reaction that we've been getting, and it's been a massive reaction all over the place. Up, down, left, right, sideways, backward, pretty much any direction that you can think of, the market went there. Now, generally speaking, it's fairly common to see a pretty heavy reaction. And when you look at the volume coming in this morning, it really goes to show you what's happening. We were at over 2 million contracts traded on the S&P by 8 o'clock this morning, right? That's a normal day's worth of volume from midnight. That's a massive amount of volume. So, and that same can be said across all of the markets. Crude oil, the bonds, gold, all of them have just massive amounts of just volume coming in after these elections have come out. Now, regardless of whether or not you got the person you were looking for, if you voted, congrats, you did your duty, and that's about all that we can ask for. Now, looking at the movement that we had today, the bonds had a huge gap down. If we look at where price closed yesterday, we closed at 162.02, and we opened up down here at, let's see, 159.09. So pretty big gap down here on the bonds, and that really goes across the board. Everything had a big gap today. Now, with such a big gap, we need to look at what happened the day prior. You know, is there reason to believe a morning move may happen? Is there reason to not believe one, etc.? Yesterday had a relatively solid downtrend. It was a nice, obvious move down, big cut through the lows with nice continuation. They did find a little bit of profit taking. You could argue that that may even be a flag pulling back towards the end of the day, and then they open way down here. Any sellers who have been in this through here, on the pullback, you know, anywhere through here, if they open up and they're way down here, you better believe they're going to take profit. So in this type of scenario, we expect to see a little bit of a bullish bounce to start the day off because it makes sense. All of the sellers who've been shorting yesterday, they were right on their call, and now they have a really good profit built into the position. They're probably going to exit. Now, is that going to cause a full reversal on the day? Maybe, maybe not, but at least we know to expect a bounce. Then we start off the day with a strong bull candle to even further emphasize that allows you to become a buyer on the very first candle of the day, given the circumstance. You're not looking for a huge run. You're not expecting it to run, 50, 60 points back to the highs to fill the gap. That's not likely. What you are looking to do, though, is for them to at least follow it up with twice the distance of this candle here, and that's about all they gave you. They push up, they get a nice bounce higher, and they start getting some pullback. Now, the pullback, we found that really the buyers were buying into this the entire way. They were holding support. They weren't allowing the sellers to get anything going. The sellers did have a very strong bear candle here. Looks like it might have been a breakout, but then where did they all go, right? The follow-through completely fell apart. That's not what sellers want to see, and that allows for a continuation bounce, looking for them to want to come back to the highs. After that bounce occurred, they failed to get to the highs. We start forming a lower high reversal, and they push down to a new low. So now we're starting to get some clues. Not only did we just see the buyers fail at the highs, they weren't able to complete that move through the high, but the sellers were strong enough to get to a new low. Although it wasn't very strong, that's still a big clue. We're starting to see things get a little lopsided. So if we are going to be buyers on this, we can't just buy at the lows anymore. We have to buy underneath the lows. We have to try to get an order in at the best price that we can try. Otherwise, we have to wait for a really good reason. And the majority of the emphasis now turns to the sell side. We get a huge bounce off of the possible wedge bottom here. It doesn't look like much of a wedge, but they are closing in together. I promise if you extend those lines future, they will cross eventually. We found a very strong bull candle reaction off of that low. That's also a twin reversal off of the bottom. So that is seen as sort of a market mistake where the market realized, oh, wait a minute, I didn't mean to do that. Sorry, let's kind of take that back. And they cut back the other direction. That's a nice opportunity to get long, to try to drive that market back up. Just like we saw back here, though, you're not expecting the market to get to a new high anymore. We've already seen the buyers fail once. The likelihood of them failing again is very high. And now we have a possible wedge top as well. We push into the wedge top, but it's after a very strong bull run higher. Much safer to wait, sit on hands. Arguably, yes, if you are aggressive, you could sell there. If you wanted to wait for a couple more, you could sell there or there as well. For me personally, I like being very conservative on this type of approach because I want to make sure that we're on the right end of the trade, right? So you get that nice bearish reaction off of the highs. It's very obvious that the sellers are back in this. This completely negates the entire up move, which is exactly what we want to see. So any bull attempt, we're going to sell back down again. Beautiful little sell right back down to drive the market lower. And if you miss that one, we have a breakout right here that allowed you to jump in as well. Either way, though, just a gorgeous run to the downside, and it's still not done yet. It's still pushing. So really good example of just a very volatile day. Keep in mind, right now you're looking at the bonds, and each one of these little blocks right here is 4 ticks. Now, if you look at the bonds yesterday, those 4 tick boxes look a little bit bigger, right? So we have a lot of range today. The one big thing that a lot of traders need to do on this kind of day is keep their risk in check. That's one of the biggest ways that you're going to blow out your account on a day like today, is getting your risk out of hand. As long as you stuck with your risk, kept your exposure as close to what you need it to be, followed your rules, made a plan, and stuck with it, you did just fine today. Hopefully you found this useful. Hopefully you learned something, and we'll see you in the next one.